IRS audit trends straight from the IRS. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. And on today's Adam Talks, very interesting IRS data from a recent May 17, 2022 Government Accountability Office report on trends of IRS audit rates and results from individual taxpayers by income. This is a really interesting report that was just released. So I want to talk about it on today's podcast because there's some nuggets of information that's actually pretty helpful in understanding how the IRS is approaching audits, what their thinking is, how they're doing. You may be shocked to learn that they're not doing so well, and some of the trends over the last 10 or so years. So I'm going to just kind of throw out some information, talk about it, give you my thoughts, but pretty interesting podcast. So, and you could check out this GAO report. You can just Google GAO report trends of IRS audit. It came out May 17, 2022. It's about 40 or so pages if you have nothing better to do, but I promise I'll summarize it in like 10 minutes and you're not going to need to read it yourself. So basically just some trends. In recent years, the IRS has audited a decreasing proportion of individual tax returns. Now, this podcast is not on IRAs or 401ks or on corps. It's on individual tax returns, okay, returns that we all file. So according to the Treasury Inspector General for Tax Administration, it's reported that the audit rate has declined 44% between 2015 and 19. And based on their report for these years, the audit rate dropped 75% for incomes above $1 million. Okay, while the audit rate for lower income taxpayers who claim the earned income tax credit, which is a hot audit area, decreased 33%. So the IRS is falling behind mostly because they don't have enough people. They're losing people, people are retiring, and they don't have enough money to hire people. So there's been some recent legislation that they were going to increase IRA's responsibilities or IRS's responsibilities. The IRS's budget in 2021 was $11.9 billion. That's over $200 million less than 11 years ago. Okay. So their budget is $200 million less than 11 years ago. And according to various IRS officials, with inflation and anticipated mandatory pay raises, IRS 2021 budget is $2.7 billion less than what it was in 2010, 22% reduction. So they need money. They need people. Now, the Build Back Better Act, which didn't pass, had a provision in there that was going to add billions of dollars to their budget. That never passed, but I assume something will pass in the near future that will add some more money to the IRS budget. So essentially they have IRS officials say they expect to support about 74,000 full-time employees, which is basically what they had in 1973 when you look at their level. So they are basically drowning. They're not even treading water, right? They are drowning. They're swimming upstream, and you can see it in the results. They just don't have enough manpower, not enough resources. So they're basically auditing the low-hanging fruit, and unfortunately, they're auditing low-income taxpayers because it's easy audit. So let's talk about audit rates, and they're going down. From 2010 to 2019, the audit rates of individual tax returns decreased on all income levels. Okay, so on average, individual tax returns were audited over 3 times more often for tax years 2010 than 2019. Okay, so things are going backwards. And essentially comes down to funding, less people, and more complicated taxpayers. So let's go to audit rates for high income earners. Okay, so income earners, high income earners also saw a decrease in audit rates, largely because their audits tend to be more complicated, right? They have itemized deductions, they have more investment income. It's not just straight up W-2. And generally you require auditors to spend more time on it, more sophisticated type auditors. And again, the IRS just doesn't have enough of them. They just don't have enough time, enough manpower to conduct enough of these audits. So the average audit rate for the highest income taxpayers, 5 million or above, it's slightly increased from 17 to 18, but it's still down. IRS generally audit high income taxpayers at higher rates than lower income taxpayers from 2010 to 2019 from a higher percentage, but they're actually collecting less money, which we'll see in a second. So from 2010 to 2019, the number of audits of individual tax returns decreased from 1.2 million to 386,000. Wow. The number of tax returns, and at the same time, the number of tax returns increased that were filed from 142 million to 157 million. Okay, so more tax returns, more people filing returns, less audits. The audit rates decreased 1.2 percentage points for taxpayers with income from 5 to 10 million. So less audits. Now, interesting, the earned income tax credit, which I mentioned is a hot audit area. They have higher audit rates than audit rates for high income earners. They're auditing low income people or earned income tax credits at a higher rate than rich people. Why? Because they're easy audits that take less time. So it kind of is working in reverse. People that make less money are getting audited more than people that make more money, just because the IRS doesn't have enough people, enough costs are running high, inflation, don't have the volume of employees. So they're going after the low hanging fruit, which is basic income tax returns. And the earned income tax credit is just the easiest one to make sure you're entitled to it. So they're doing a lot of those audits, and sometimes they collect, sometimes they don't, but they're still putting through those taxpayers, through the audit cycle. So here's some interesting IRS data that I collected from this GEO report. I'm just going to throw it out there, for you to digest. From 2010 to 2021, the total amount of additional taxes the IRS recommended from individual taxpayers has decreased. They're auditing less, right? So they're collecting less money. From 2010 to 2021, the average number of hours spent per audit increased 30% from 5 to 6.5 hours. The average audit hours were generally stable for low income returns, but for the higher income returns, they're spending more time and they just don't have the people. So that's why they're tilting their audits towards the earned income tax credits and lower income folks. Taxpayers with income of 50,000 above, the IRS spent fewer hours on average on no change audits compared to audits with tax changes. Taxpayers at this income level are more likely to respond to IRS. So that means if you're a low income person, you may not respond, or it's a very simple issue. If you're a higher income earner, you may respond with more documentation, which creates more work for the IRS. And that's one of the reasons they aren't auditing those folks at a higher rate, because there's just too much work involved and they don't have the manpower. So this is pretty interesting. We found this is from the IRS, the GEO report. We found that audits on the lowest income taxpayers, particularly these claiming the EITC, resulted in higher amounts of recommended additional tax per audit hour compared to the highest income group. So this is crazy, right? Audits of individual taxpayers with income of 5 million and above had the highest average recommended additional tax per audit hour, followed by audits of claiming the EITC. So either they're going after the super rich people where they can find something and then hit them up for a bunch of tax, or they're going after the low income folks that maybe didn't file their EITC properly, the earned income tax credit, or filed it improperly. And unfortunately, they are getting targeted. So the low income and the higher income seem like they're a target in these audits, because the high income, even though they're audited less, they're getting more revenue from those audits because there's big ticket items, the money's bigger. And then they're just going after low hanging fruits and the EITC audits. And then the people in the middle, pretty much all of us, are slipping through the cracks, which, I'm not complaining, with the IRS is. And that's why they are demanding more money, higher budget, because they feel like they're not collecting as much money. Look, if you look at the statistics, they're basically collecting money like they did 30 years ago. So what did the IRS explain? How do they explain this? They basically say, listen, we have to invest fewer hours in these easy audits, the ITC, so they make more sense because we can bring in money. The higher income audits, we need more sophisticated agents. We need more time, more resources, and sometimes it just doesn't pan out. Let's talk about cost versus audit reward. Between 2016 and 2020, IRS estimated that the revenue collected from audits was about 2 to 4 times greater than the budgeted cost was audit. So they're still making some money. They're just not making enough. So I'm going to throw you some more data here. And this is from 2019. Okay. So from people that made $1 to 25K, number of returns were 6 million or so. They audited 196,000 people. Let's go 100 to 200. They audited 22 million returns. They audited 37,000. Let's go 1 million to 5 million, 574,000, 5,800 or so audited returns. 5 to 10 million, 40,000 returns, 549 audited. Okay. So they are from, how about this? So 25 to 200K, you're looking at about 162,000 audits out of 97 million returns. So that's the big bucket, right? If you make between 25 and 200K, there's 97 million returns, almost 100 million returns, only 162,000 are audited. Okay, so not a huge number. Now, if you look at trends, let's just look at some basic numbers. Make between 100, 200K. The audit rate in 2010 was 0.8%. In 2019, it was 0.2%. Okay, huge numbers. Now look, 25 to 50K, 2010, 0.6, 2019, 0.2. So let's see what numbers stick out here. 5 to 10 million, the audit rate in 2010 was 13%, 2019, 1.4%. See, it's just going down. 10 plus million in 2010, 21%, which is a high audit rate, 2019, 3.9%. So if you look at all these numbers in the aggregate, if you make under 200K, you basically have a 0.2% chance of getting audited. If you make 200 to a million, you basically have around the same 0.2 to 0.5. So maybe like a 0.3% chance, and a million plus, you're, probably around 1% or so. So still very low audit rates. The IRS is struggling. Okay. What does that mean for all of us? It means that chance of getting audited is a lot less today than it was 10 years ago. That could change. This just comes down to dollars and cents, right? IRS has more money. They'll hire more people, better training, more sophisticated audit folks, and we'll all get audited more frequently. So the numbers speak for themselves. I mean, just especially if you're a high net worth person, right? In 2010, if you made more than $5 million, 13% chance of getting audited, now 1.4%. You made over $1 million in 2010, 8.2%, now 1%. So even 500K to $1 million in 2010 was about 3.6%, now 0.5%. So it's across the board. IRS is struggling. These numbers prove it. We'll see what Congress does to get them some funding. I'm assuming that's going to happen at some point. Whether you're Democrat, Republican, you understand the money the IRS brings in, and it's principle of our system that there needs to be oversight. If people aren't checked, they may not file returns or may not file their taxes properly. So the system, for it to work, there needs to be supervision and infrastructure. So the IRS does have a place. It's needed. If not, no one's going to ever pay their taxes, and our system will break down. We'll have no money for our military, roads, airports, schools, all that good stuff, healthcare, social security. So we need it. The issue is no one wants to get audited, in an overbearing manner where your tax returns getting audited every year, or you have IRS agents that are hawking you for frequent flyer miles. You're not reporting stupid stuff like that. But it's funny that they're focusing on the EITC, the earned income tax credit for low income folks, trying to hit them up because it's easy and they don't have enough costs. It's crazy. And again, folks that make 25 to 50 grand are pretty much getting audited at the same rate that people that make 200 to $1 million. So take it for what it is, but chances of audits are going down, and I guess that's good for all of us, but there's probably a lot of money out there that's not being collected that all of us, part of society, would probably benefit from. So juggling, right? We don't want the IRS in our business overbearing, but at the same time, you want your neighbors and everyone paying their fair share. You shouldn't be the only one doing so. So, and that's without getting into the constitutional debate of whether income taxes are legal. I'm not going there. I'm not Wesley Snipes. I've gotten some interesting debates with clients and colleagues and friends about that. I'm not going there. Basically, that's the system. The IRS is there. We need to pay our taxes. We got to follow the tax code. and essentially benefits all of us if we all comply, because the government will have more money to hopefully do good things with it. Not to say the government always does good things with the money, but you don't want to be in a system like Greece or some of these other smaller countries where no one pays tax and it's all corrupt and the infrastructure is a mess and schools are abysmal, and the society fabric just doesn't support the population. So that's not beneficial as well. Other than that, hope you guys found the podcast interesting. If you want, you can check out the GAO report. I hope this podcast kind of summed it all up. I actually read every page, every word, and just highlighted the key parts of it. There's a lot of interesting graphs that I kind of summarized that you may want to just check out. But obviously the trend is downwards, and the IRS needs more money to catch up, because if not, they're going to drown. That's it. Have a great day. Thanks for listening. If you're watching on YouTube, thanks for watching. Appreciate all your support. And check me out again next week. Have a great rest of your day and be well. Take care.